Hello and welcome to this edition of the SA Crypto Market Analysis, recording from my home, and Graham is at the Avant Core offices in KZN. Welcome to the edition, Graham.
Yeah, thanks James. Good to connect, even though it's not person to person.
Yeah, we're all practicing social distancing. And this edition proudly sponsored by Huobi. Check him out. The link in our podcast and YouTube description will take you through to the SA Crypto reference. So we obviously appreciate your support there. Huobi are kind enough to support this edition. You can check them out. The most remarkable liquidity, the most remarkable choice of coins in the market. So have a look at huobi.com. Now, Graham, very interesting times indeed. It's unprecedented times, no two ways about that. Let's have a look at the S&P 500 first. What are you seeing? I mean, is this panic stations deluxe? What do you reckon?
Yes, I mean, like you said, unprecedented times. I think this is, we're going to have studies of this type of events that we're seeing right now for many years to come. Incredible things happening on the S&P and across traditional markets and the Bitcoin markets. We thought we'd jump into the S&P first and some of the action in the equities. And yeah, I mean, from top to bottom, this most recent sell-off we've had, you can see on the screen there, 32% drawdown. But I think it's not as low as we can go. And if you look at previous market recessions and extreme sell-offs, I think there's still quite a bit of a way to go till we can say that we're starting to get anywhere near the bottom.
So a lot more pain on the way, very likely. I mean, yes, if you look at the 2001 crash, you then look at the 2008 real estate bubble, all of those were average about 52% if you combine those two. So there's at least another 20% to go if history is going to play itself out. So very scary indeed in the traditional markets.
And to add to that, I mean, I think that this time around, the extreme levels of debt that we do have in the system, the length of the market cycle, you can see that this bull market that we've had is significantly longer than we had between 2000 and 2008 crises. It's been a historic bull market that we've had, and the excessive QE, etc., that we've had to keep the market propped up. I can't see anything less than a full-blown depression, which would see us even potentially eclipse 2000 and 2008. So that's something that's quite firmly on my radar. I mean, if we do correct down to previous historic highs of 2000 and 2008, that's going to take us to a 54% correction, which for me is probably the first stop in this current downturn that we've had.
It's going to be an interesting couple of months ahead, and probably an interesting couple of years.
Yeah, the only thing I'd add here is a tweet put out by Raoul Powell, which I think is very apt at this point in time. But he's saying, a normal recession usually leads to a 30 to 40% fall in equities. So that's kind of where we're sitting at the moment. So we priced in for a normal type of recession. A big recession usually leads to a 40 to 60% fall, and a full-blown depression, a 60 to 80% drawdown on the equity market. So my high probability outcome at the moment is a full-blown depression, which would be a 60 to 80% drawdown. So that's really what I'm trying to take into account when with my macro market outlook at this point in time.
And what about the crypto markets? Do you think that there's a decoupling happening at the moment, or is that just a fun sentiment for us crypto enthusiasts to be playing around with?
Yeah, so lots and lots of talk about Bitcoin being a safe haven, and many critics coming out and saying, well, look, this proves that Bitcoin isn't the safe haven that people were claiming it was, and claims of it being highly correlated to equity markets and traditional markets. And I mean, some of those claims do definitely have weight behind them. But for me, it's still too soon to tell. And what we've seen time and again in these type of extreme scenarios of fear and uncertainty and panic in the markets is that everything across the board sells out. So your equities, bonds, property. Look, so bonds actually need some clarification because your treasuries and your really safe bonds did appreciate, but your gold and silver and Bitcoin have all sold off with a lot of a lot of volume and a lot of impetus behind it. But what we are seeing now is a rally in the Bitcoin price, which we'll jump into a smaller time frame to have a look at. But yeah, longer run, that's exactly what I see. I see a full decoupling from Bitcoin to the traditional markets, and that's why I'm really, really bullish at this point in time, because in my opinion, this is what Bitcoin was essentially built for. It was built to be an alternative to assets in the traditional space, and it's limited in supply. And for those reasons, macro long term, I'm really, really bullish.
And what about the short term? We've seen a nice recovery today, especially just in the last 12 hours. We've seen a lovely recovery since the terrible sell-off from last week. Short term, where do you see the current bullish action tapering off?
So yeah, let's jump into a short-term time frame in a second. But while I'm on a larger time frame, let's just have a look at this, because this will give us some context to what's happening in the shorter term. So what I've done here is I've highlighted a couple of really key levels which are depicted by these red dotted lines, and you can see that these are the levels that the market is respecting at this point in time. So we had this big sell-off that was from the beginning of March. The 7th of March is when we had that real capitulation from the 10,000 level, and that was an extension of this head and shoulders pattern that you can see that we had developed, and obviously we went straight through our targets all the way down to 4,200, which was just incredible. And there you can see that our bottom out point was essentially was the same level of significance that we had all the way back around about the start of 2019. So that was the short-term bottom, and then when we then discussed where to from here, I felt that we would move between this blue zone and this orange zone at the bottom. So that's where we've played, kind of hovered in between the last couple of days, and now we have actually broken to the upside. So let's drill down into a closer time frame here. You can see in more detail what I'm talking about. So these are the two broad levels. So this is the blue zone, and this is the orange zone, which is the levels of significance. And we've had a lot of volume historically take place at these levels. And then significantly, you've got, this is your extreme low on the left. So this is your first green circle showing you your extreme low. And our next low was a higher low. So that was your first sign of potential bullishness in the market. And then this red zone, you can see, if you look on the left, your volume, your volume by price. This shows you that this is where all the price action was taking place. And your really key level here was your 5,500 level. And pleasingly, in the last couple of days, we've broken through that. And that's seen us move now into the upper zone here, into the blue zone. But we seem to be hitting a little bit of resistance here at the 6,800 level. And yeah, I think that could be it for now in the short term. So I think this is a nice opportunity to take some profits if you were on a leverage trade, and wait for the next setup, because we have moved really nicely the last little while. So yeah, that's really what I'm seeing at the moment. Long term, I think still a good opportunity to enter the market. Maybe we can get a little bit of a pullback in the short term to get a better entry, but I think a great level still for accumulation for long-term investment. Technically, long term, this could well be the bottom. This could well be the bottoming out, and we never see 5,000 again. That's a distinct possibility because of this strong bottoming structure that we do have here, and the nice impulsive move that we've had the last couple of days out of that zone. But that by no means that the bottom is completely in, because of the volatility and the uncertainty that we do have floating around. But this is why I say long term, I'm piling into Bitcoin. If the price does drop further, I'm willing to release some more into the market. Yeah, that's really where I stand right now. And
just for short term traders, you'd say perhaps hang on a bit to wait and see what comes next.
Yes, I think that this the 6,800 level is a significant level of resistance now, and you can see that the market has at least respected it the last couple of hours. Maybe we get a bit of a wind up here before we push higher again, but for the very short term, I think that's a good opportunity to take profit on the long side. Okay, all right, and just wait and see what comes next, which we'll bring you next week. Graham, well, thanks so much. That's a very comprehensive analysis all the way through from traditional financial markets right up to where we are with Bitcoin. Thank you. Yeah, thanks, James. And we follow we follow with a lot of interest.
Absolutely. Have a good weekend, and we'll catch you next week on Skype.
Great stuff.
Excellent.
Have a good one, James.
Graham. That's it for this edition, folks, and it was proudly sponsored by Huobi.com. They are the third largest exchange by liquidity. All you got to do is sign up using our reference link in the YouTube and podcast description, and you can benefit from their incredible liquidity, their incredible volumes, and of course, their incredible choice of cryptos available. From myself, James Preston.
And myself, Graham Tennant.
It's goodbye for now.
Cheers for now.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.